Alrighty guys, welcome to my official video explaining my strategy and how to use it. So, the things that we need to understand for this video are how to mark out London session highs and lows, what is a fair value gap, and that's really about it. And then a continuation break of structure. So in continuation break of structure is something that I kind of came up with. I mean, it's probably been came up with by people 1,000 times before, but that's just what I call it because I don't know what it's actually called. Okay, so I was on a 3-day winning streak until today. Actually, today's only my 4th day trading this new model. So, 3-day winning streak right off rip ain't too bad. And today I just got beat by the market. I just missed the bigger move up. I explained it in my trading recap for today. You guys can go watch that. But yes, so how do we mark out London session highs and lows? Excuse me. So the easiest way to do this is to go equip an indicator that you can find in the indicators tab. Just search like session sweeps by Luxalgo, and then boom, you have your sessions. So you can go equip that, or because you're gonna have to edit that a little bit, so I would just do it this way, honestly. So basically, London session opens at 3:30 a.m. Eastern time, so you guys can change that to whatever you are. So like that would be 12:30 a.m. for like if you're on the West Coast. So, and then it ends at 8:30, I do believe. Yeah, so as you guys can see, London session opens right here, 3:30. And then it closes at 8:30. There we go. Okay, so this right here is London session. So you want to mark out the highs and the lows. I have an indicator that automatically does it. I had to buy this indicator. Wouldn't completely recommend buying one. So yeah, now that we have this, marked out, we would like to basically see, so some days it'll consolidate, and we'll go over one of those examples too. So some days it'll just stay inside London session at market open, and then some days it'll have already broken it. So if it already breaks it, then that is the direction that you want to go for the day. So as you can see here, we want price to go down because it's broken through the bottom of the range. Well, not the range, just that low. So as you guys can see here, market is about to open. So we'll slow this down to 1 update per second. So this is a really fast strategy. So as you guys can see here, boom, immediately we form a 1-minute fair value gap. So if you don't know how to identify fair value gaps, then you can go check out my video on how to identify fair value gaps that I made a little while back. And as you guys can see, we have a retest, and then boom. This is what I call continuation break of structure. So as you guys can see, we came down, made this low, came up, and then had a candle closure on the 1 minute below this low. So you enter whenever the candle closes below the low. It has to close to count on the 1 minute. So you want to move your stop loss to the swing high of the little move, and then you want to drag this down until your risk to reward ratio is 1-to-1, so it's 1.02. So that's close enough. And this trade was very, very fast, as you guys can see. So yeah, that was this example happening yesterday. So this is kind of a momentum trade. So if there's a boulder rolling down a hill at market open, the boulder is really going to be rolling down that hill, right? So like right now, the boulder has been rolling down the hill, and on market open, all of that volatility, people are going to be like, the market's down, I need to sell. So you get a lot of sellers. And yeah, that's yesterday. So fair value gaps are basically places where price wants to respect if we're in a downtrend. So we should respect it, but if we don't, it's no issue. You can enter on an inverse fair value gap, which I think we might have had an inverse fair value gap trade this day. Maybe. I'm not sure if I've actually had one lately. I know I've back tested so many of them, but okay, so here we can see some real, this is like, if this happens pre-market, I'm like really happy. Like this is A+ day. So we're in the middle of the range. So which way are we gonna break? Are we gonna break up through the range? Oh, we're gonna break down. Okay, so let's look for some fair value gaps. Boom, we got a 1 minute right there. If that gets disrespected, then we can go from there. So boom, we get a continuation break structure because we closed, this candle closed below the previous low. So draw out our 1-to-1. We want it to be risk to reward ratio be 1. Boom. It may chop a little bit, that's okay, you know, still making lower lows or lower highs. That's all that really matters. And then yeah, this trade ended up working out very well as well. This was Wednesday, so today's Friday, so we'll go back to Tuesday to show you guys that example. Another beautiful example, how we're in the middle of the range here. So this is market open. We'll see where price breaks. So we broke down. So as you guys can see, there's not a 1 minute fair value gap. So we'll go to the 2 minute. Oh, I see one. 2 minute fair value gap. Go to a 3 minute. Higher time frame, higher power whenever it comes to fair value gaps, by the way, guys. Remember that. Okay, so just a 2 minute fair value gap. And that counts just as much as any other kind. So as you guys can see, it gets respected very well. And until we get a continuation break structure, what can we do? Enter on that candle closure, 1-to-1. Trade just plays out beautifully. I mean, chop is okay. As you guys can see, we're retesting a 1 minute fair value gap again, right here. Retest that, boom. Trade one. So yeah, it's really simple, and I wish I could try to find an example of an inverse fair value gap trade. So basically, an inverse fair value gap trade is where, let's just say, price, let me move my face. Try to find the brush. I'm not sure which one it's on. Okay, so let's just say on market open, price, we break below London. So as you guys can see here, we break below London, but we have a nice pullback, okay? So after this pullback, we create, let's just say, a bullish fair value gap. So we still want it to go down because we broke below the range. So if you get a candle closure below this fair value gap, then you can expect price to continue going down. So you can also enter short on that and 1-to-1, and that will work as well. So yeah, this is the criteria for not trading my strategy. So let's just say at market open, we were like way away. So let's just say like this right here was market open. We're way away from London session. So if you're not anywhere near London session, either lows or highs, then don't trade because there could be a reversal. You could trade the reversal back to London session, but that's not a part of my strategy. So yeah, or this is the one other do not trade. Let's just say we come down, sweep out London lows, and then come up and sweep out the highs. Now we don't know where we want to go because we've taken out the low and the high. So we're probably just going to be consolidating, and that is not ideal. So do not trade if you see that, and do not trade if we're way away from London at market open. The most ideal days to trade is whenever market opens inside of London session highs and lows. And like I said, I have a whole video on fair value gaps. You guys can go check that out. And then the continuation break of structure is super simple. And whenever you guys are trading with this momentum with the 1 minute fair value gaps, make sure they cannot get inversed. If they get inversed, so let's just say it were to close above this here, you would not take the trade if it had a continuation break structure even still. You would not take the trade because the fair value gap got invalidated and there's not as much momentum down. So yeah, also I'll show you guys another thing just to look out for that happened to me today actually. I mean, you live and you learn. This wasn't really something that went wrong, more so something that I didn't exactly know how to react to. So, as you guys can see today, we already had a really big push up, and then market opened right here. So, right on market open, we create a bullish 1 minute fair value gap, and then we inverse it on this candle. So this is what I'm talking about. We create a gap here, so we want it to go up because we had a break above, but market open was still really close. It was inside of the range, so you can expect to still be, this is still validated. You still want it to go up. And yeah, so basically we inverse this 1 minute fair value gap, but this one candle was so huge. Now, you do want to wait for the 1 minute break structure. That is preferable. But this time, see, most of the time, it'll kind of like close right above somewhere in here. And you could have 1-to-1 this and literally won today. But no, I'm afraid that I missed out on a lot of the buyers here because I entered right here really after the big push, just because I wanted to enter on that candle closure. So that leads me to wonder if we could enter an inverse fair value gap on the 30-second time frame, which I'm gonna have to back test and play with a little bit. But if so, then I feel as if that would be super ideal. I don't even have TradingView. I don't even meet the criteria. Hold on, we'll go over to my funded account. Did not do so great on this today. Today was a more heavy risk day because it was a Friday and I wanted to make some money, but I ended up losing my trade, so it's all right. But yeah, let's get in here and check this out. Okay, right here. So, as you guys can see here, this is top step. So, we have our 1 minute bearish fair value gap. So, let's hop down to the 30-second. And let's see what happens there. So the 30-second would have closed really strong right here. One to one. See, we still wouldn't have won that. It would have been a lot closer though. Our entry would have been significantly better. And two, it would have been more realistic because we would have been shooting for these highs right here. But we didn't even retest those highs, which kind of sucks. Makes me wonder if that was an SMT. Let's look actually. Was not an SMT. That Wait, would this trade have hit on ES? Hold up. Let's check this out. It was an SMT. That's why my trade didn't hit today. It was a filthy SMT. No way, dude. So basically an SMT is where, so you trade the S&P 500 and NASDAQ as a pair, right? And it's where there's a difference. So let's just say one will take out highs and one won't. And today I just happen to be in the index that didn't. Wow. So look, this is the 837 high, and look at how high up we take this out. So, oh my goodness. So if I would have taken this trade on ES today, let's just see what would have happened, even on the 1 minute. Let's see. That was a 30-second fair value conversion. Candle closure. We would have won. Look at this. We would have actually won. So this right here is the 830 high. I want to show you guys this. This is the 830 high, and this is the 830 high on here. Look how much lower this is. This is so much lower. Wow. Okay, well, yeah, that was just unfortunate, man. Like, for real, that's really unfortunate. That wasn't even my strategy. That was just an SMT for me that I didn't see. That sucks. Okay, well, yeah, look out for SMTs whenever you're trading. Or if you do want to trade like this, just trade on the leading index if there is an SMT. So let's just say, like today, ES was higher and NASDAQ was lower. You always want to trade on the one that's higher if you want it to go up. So yeah, I mean, like I would have banked off of, I would have literally made so much bread off of ES today. Wow. Okay, well, yeah. So now you can throw in an SMT into your trading. So let's just say if one's higher than the other, then go ahead and hop in on the one that's higher than the other. I mean, that's all I gotta say. But yeah, thank you guys so much for watching. Like I said, if you don't understand fair value gaps, how to mark out liquidity, any of that, I have videos on all of that I posted towards the beginning of my account a couple weeks ago. So yeah, thank you guys so much for watching, and I hope that you guys can understand this. If not, please drop a comment and I'll clarify anything that I need to. You guys have a great day.